Good to have you back, Peter. Welcome to the program.
Hi, Cathy. Thanks for having us.
So what do you make of the institutional selling going on now with SM Investments and SM Prime Holdings?
Right. Yeah. SM and SMPH are heavyweight index names and have been dragging the index in the past few days, as we have seen. And it is partly driven by the sizable discounted block sale. And we think that this block sale is due to a more of like a portfolio or calibration of an institutional fund, which could possibly be due to the lingering macro risk and underperformance of our currency.
Might that continue with other institutional investors? I mean, what's the feeling in the markets?
Yeah, I think it's just this particular fund lessening or limiting its exposure in the emerging markets or in the Philippines, and we can only hope that no one will follow suit.
Right, hope floats then. Well, how do you think the markets will position ahead of any news coming out from DC with Marcus meeting Trump?
Yeah, I think we're anticipating a range-bound trading in the local bourse, at least this week, amid lack of strong catalyst. But it might also take its cue from the developments arising from the Trump-Marcus meeting, as slated July 2020 to 22. So I think in terms of expectations, as mentioned by the President Marcos, a mutually beneficial trade deal is of course better for the Philippines. And we think that thinking win-win is the way forward in this particular deal. Instead of just exchanging, trade concessions, both countries could look for more collaborative opportunities to expand the overall value of our economic relationship. Maybe we can lower down tariffs on some items, as Secretary Recto suggested, like animal feeds and some agri-products, which are our top imports from US. But in return, we need the US to also integrate, the Philippine industries in their supply chain to complement strategic local industries like, for example, semiconductor, mining, BPO services. And I think the key to negotiation is not really taking a bigger portion of the pie, rather, making the pie bigger, which is a win-win agreement for both countries.
So win-win is just one scenario, but what are the other scenarios that we can draw up from negotiations?
Well, I think if we can't really lower down the tariffs, we stay with the 20% tariffs that is being imposed to us by President Trump, I think we can still benefit from trade diversion here from companies relocating from China and Taiwan. On the ground, what we hear from companies is that they are getting increase already, from companies from Taiwan and China, those who want to relocate in the Philippines. And I think we can still benefit, but we have to maintain our edge here in the Philippines.
And because of that uncertainty about whether we maintain that edge, there's this correlation we're now seeing between the peso and the direction in local stocks. Of late, we've seen a weakening of the peso versus the dollar and also a weakening in the Philippine Stock Exchange Index.
Yeah, exactly. I think it's also the weakening of the peso is also attributable to the strengthening of the dollar, and this is particularly driven by the expectations that the Fed might pause in their next interest rate decision coming this end of the month.
Okay, what about the Fed futures pricing? Because it's less than 25 basis point of a rate cut for the rest of this year because of the better U.S. data that we got on retail sales and jobless claims. So what now on the monetary policy side and how the Banco Central may decide next month?
I think the expectations of the market currently is for the Fed to keep interest rate. Although there are some Fed officials who have dissenting opinion on this, they want interest rate to be lowered in the next Fed meeting. However, I think given that inflation was still on a increasing trajectory, as we've seen in the latest CPI number of the U.S., we think that the Fed would keep interest rates in their next meeting, and also it will again influence the BSP's interest rate trajectory as well.
So what does that mean? The BSP staying on hold, or could it decouple as it has over the past couple of meetings?
I think the BSP has room to decouple, given relatively the peso has been stronger than last year, and also the growth of the Philippine economy has been subdued, given the first quarter GDP has been subdued. So I think the BSP would there's room for the BSP to cut interest rates, although they have to also balance it out, given that any cut in interest rates would also spill over to the currency.
That's so true, and also on how people spend. How do you see moves towards stricter rules or an on-right ban in online gambling impacting the gaming counters listed at the PSC?
Yeah, maybe some points on online gambling. I think we have to understand that on an economic standpoint, gambling is a form of entertainment, but it has spillover effects. That is, it imposes societal costs such as reduced productivity or financial instability. But just like any other sin goods, like alcohol and tobacco, a total ban might not work, as it may not really eliminate gambling. It would just push operators underground into the black market, which is more dangerous and harder to monitor. I think many are calling for stricter regulation when it comes to online gambling, and it can follow a similar model like alcohol or tobacco.
Okay, let's get down to earnings before we go. Earnings season once again, and BPI's reported last Friday. What do you make of the earnings so far, and what it could say about the local banking industry in the first half?
Yeah, I think for BPI, it has reported its first half earnings, and actually it came in line with our expectations. And I think the growth was really attributable to the double-digit rise in net interest income and high single-digit expansion of its non-interest income on the back of strong fee income from credit cards, insurance, and wealth management. And for the banking sector as a whole, we do still see growth in the next second half of the year, while we expect interest rate cuts to potentially, drag its net interest income. This could be well supported by the growth in loan volume, especially as the BSP has already reduced the reserve requirement ratio and plans to further reduce it down.
Got that. Thank you so much for setting us up for the week. Peter Garnace of Unicapital Securities Inc. joining us.
Thank you so much, Kat.